Hello there. Well, stock markets are doing pretty well so far this year, with most regions around the world seeing kind of double-digit growth. And as we've discussed previously, one of the reasons why stock markets are going up is because the underlying profits of the companies is also going up. In fact, we're seeing some of the strongest earnings growth that we've seen for really quite a long time. Now, a lot of the focus has been on the so-called Magnificent Seven, or the big tech stocks in the US, and they are seeing some very, very strong earnings growth driven by artificial intelligence, etc. But what's interesting is we're seeing that growth really all around the world. So if we look at the US specifically, we can see that the non-Mag 7 stocks, if you like, the other 493 stocks in the S&P 500, are actually expected to see their profits grow by more than the Magnificent Seven by the last quarter of this year. So we should see better growth in the other smaller stock companies rather than just seeing that growth in the big tech stocks. A similar thing can be said if we look globally. We're seeing some pretty good growth pretty much in every region. Now, we are expecting that to perhaps slow next year. Of course, with growth being so strong this year, that can't continue indefinitely. But the picture for next year looks pretty strong as well, just a little bit slower than this year. The exception to that is Japan and China, and those are actually expected to see their earnings accelerate next year. So we think there's some good opportunities all around the world. And if we look at how markets have actually performed, we've seen the rest of the US market has outperformed the Magnificent Seven so far this year, and the rest of the world has outperformed the USA. So that's a positive, because we like to have well-diversified portfolios, and it's nice to see that almost wherever we invest in the world, we've seen some pretty good returns. So based on all that, we've recently invested in a couple of new products which we think can kind of benefit from some of the trends that we're seeing. These are based partly, at least, on returns, or stock markets rather, in both China and Japan. And in both cases, we've done that via structured products. For Japan, we've used one of our defined returns products, and I'm sure most of you will be familiar with those. We've used them for many years. But if we take a structured product, a defined return, and base it on the Japanese index as well as the UK FTSE 100, we can get a much better return at the moment. The product we've just created will give us a potential return of over 17%, just provided the FTSE and the Nikkei in Japan just go sideways over the next 12 months. And because we've got a positive outlook for Japan, we think that's very possible that could happen, and therefore we thought that was a good product. By comparison, if we did a defined return at the moment based on just the FTSE and the S&P 500, we might get 11 or 12% return. So by adding in Japan, which is more volatile and can be a little bit more up and down than, say, the US market, we can get a better return as a result. For our kind of more aggressive, more risky models, we've also put a little bit in a Chinese structured product. This is one that's based on the Chinese market, but it provides a geared return. It's a 6-year product, but over the term, if the market goes up, it will provide a multiple of those returns. So if the market goes up, we should see some outperformance. But if the market goes down over 6 years, and that is possible, certainly with a risky market like China, there's also an element of capital protection. So we do think there's some great opportunities there at the moment, but there are also ways that we can kind of play them in a relatively sort of, we think, a clever fashion that can have some downside protection as well as potentially providing some really strong returns. So we think it's really important to say we can still have our diversified portfolio, we can still invest globally, we don't have to put all our money in the USA or in the Magnificent Seven to benefit from the strong earnings growth that we're seeing. So we hope you found that useful, and we'll see you again next time. Thanks.